Welcome to the deep dive. Today we're plunging into the world of Diageo, an absolute titan in global spirits.
That's right. I mean, think about it. Their products are in nearly 180 countries, over 200 brands under one roof. You've got Johnnie Walker, Guinness. The list goes on.
It's huge, and what's really fascinating, I think, is the history behind it all.
Oh, absolutely. Diageo itself, the company, was officially formed in 1997, which sounds recent. But the brands, well, that's where the deep heritage lies. Guinness started way back in 1759.
1759.
Yeah, and Johnnie Walker kicked off in 1820. So centuries of brewing and distilling experience there.
Even the name Diageo sort of hints at that global celebration aspect, right? Celebrating life every day, everywhere.
Exactly. It fits perfectly.
Okay, so for this deep dive, our mission is basically to give you the essential rundown, how Diageo was formed, its unique business model, how it stacks up against competitors, and where it might be headed.
Sounds good. Let's jump in.
All right, so formation, 1997. It wasn't just created, was it?
No, not at all. It was forged, really. A monumental merger between two British heavyweights, Grand Metropolitan and Guinness.
Like a Grand Met and Guinness.
And this wasn't just sticking two companies together. It was a very deliberate, strategic pivot, a big one.
A pivot how? What was the big change?
Well, they immediately started shedding non-core assets. Big food brands like Pillsbury and even Burger King. They sold those off to focus purely, laser-like, on premium alcoholic beverages.
That sounds risky. Getting rid of such household names, was that controversial?
I think it was definitely bold, maybe prescient is the word. This idea of pruning and grafting, getting rid of what doesn't fit, adding what does, it's still central to how they operate today. And that sharp focus led straight to their key growth engine, premiumization.
Premiumization, right. The whole drinking better, not more idea.
Precisely. And it's not just talk. You see it right in the numbers.
How so?
An incredible 63% of their net sales now come from premium and above brands. That's huge.
63%. Okay, but doesn't that make them vulnerable if, say, the economy dips and people trade down?
That's a fair question. It's definitely a risk factor. But the high margins they get from these premium sales fuel something powerful. They reinvest massively in marketing, like $3.7 billion in fiscal 23.
$3.7 billion.
Yeah. That creates this kind of premiumization flywheel. Stronger brands justify the price, which generates cash for more marketing, which strengthens the brands. You see, it builds resilience.
Okay, I get that. And that reinvestment, I suppose, also funds acquisitions, like the tequila move.
Absolutely. The tequila pivot was brilliant. They picked up Don Julio, and then the big one, Casamigos.
George Clooney brand.
A very same.
Yeah.
And boom, tequila sales just exploded, up 79% in fiscal 2021. It shows they can spot and really capitalize on trends.
And more recently, things like Seedlip for non-alcoholic options and Aviation Gin, they're still adapting.
Constantly. Which brings us to their economic moat, their competitive advantage.
So what builds that moat?
I'd say it's three main things. One, the iconic brands themselves, the history and equity. Two, their massive global scale and distribution network, getting products everywhere. And three, this ability to be a trend shaper. They don't just follow. They often make the trend happen on a global scale after identifying it or acquiring a key player.
And that global scale also needs diversification, right? Across products and places.
Exactly. You've got scotch, beer, tequila as top categories, but also vodka, rum, gin. And geographically, yes, North America and Europe are huge, but Asia Pacific, Latin America, Africa, they provide balance. It acts as a natural hedge if one region slows down.
Makes sense. You mentioned trends. What about the health and wellness trend? People drinking less or choosing non-alcoholic. Isn't that a threat?
It could be seen that way, but Diageo's turned it into an opportunity, really.
Yeah.
Acquiring Seedlip, the first distilled non-alcoholic spirit, was a key move.
Right.
And launching 0.0% versions of Guinness, Tanqueray. Their goal seems to be whatever you choose to drink or not drink, we want to be your choice.
Winning the consumer's choice no matter what. Clever. So looking forward, what's the big picture goal?
They've stated this growth ambition. They want to grow their share of the total beverage alcohol market, all of it, from about 4.5% now to 6% by 2030.
That's ambitious. How do they plan to get there?
By prioritizing their biggest growth drivers, think whiskey, tequila, Guinness, by leading on trends like cocktail culture and, yes, moderation, and just driving operational efficiency.
And managing the risks. market swings, supply chains.
Well, their diversified structure helps. Continuous innovation is key. And they put a lot of emphasis on their ESG plan, Spirit of Progress. It's about building resilience right into the business model, not just reacting.
Okay, so to wrap this up for you listening, Diageo is clearly the global leader in premium spirits. They've got this wide economic moat protecting them. Yes, there are short-term headwinds, inflation, maybe currency issues, but they seem really well set to capitalize on those long-term growth trends in drinks globally.
Yeah, definitely. For anyone looking at investments, it has that classic blue chip quality dividend growth profile. Steady, sustainable growth, reliable dividends. That's the aim. Appeals to the long-term view.
And maybe a final thought to leave you with. Beyond the balance sheet, beyond the famous brands,
Yeah.
think about how their big push on sustainability and responsible drinking through that Spirit of Progress plan. How might that shape their legacy and, maybe more importantly, consumer loyalty down the road? Something to consider.